Ladies and gentlemen, good day and welcome to E2E Networks Limited Q4FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Soumya Chajar from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Yusuf, and good evening, everyone. We welcome you to E2E Networks Limited Q4FY25 results Concall. We have with us on call today Mr. Tarun Dua, Managing Director, Ms. Megha Raheja, the Whole-Time Director and CFO, Mr. Ronit Gaba, the Company Secretary. I must remind you that the discussion on today's call may include certain forward-looking statements and must be viewed in conjunction with the risk that the company may face. I now request Mr. Tarun to take us to the company's business and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Yeah, thanks, Soumya. Good evening, everyone. Thank you for joining us for E2E Networks Q4 Financial Year 25 earnings call. I hope all of you are doing very well. So let us begin with, this has been a momentous year for E2E Cloud and E2E. We started doing GPUs in 2019, and we have slowly built up our capacity. So last time I think we spoke, we were practically at 700 or so, 700 or 1000 Hopper series GPUs. Today, including all our GPUs, we almost have a GPU capacity of almost nearly 3700 GPUs. This makes us practically the very largest of GPU cloud GPU installations in India amongst the Indian players. This year, we also successfully did two fundraisers aggregating to nearly 1,500 crores. And so just to recap our capabilities, we have been around since 2009, initially as a private company, and 2018 onwards as a public company. Today we have nearly 100 plus engineers working on our AI, ML and cloud infrastructure platform. From a data center standpoint, we have access to 10 megawatts of data center IT power capacity spread across majorly Delhi NCR and Chennai region. So what has set us apart is we are the we were the first pay as you go cloud in India, starting our operations in 2009. Our claim to fame historically, of course, has been that a lot of large customers were born on E2E Cloud in the Indian internet world. So 2014 onwards, we have continuously built our own infrastructure software for running our public cloud. And 2020-21 onwards, we started working on the cloud GPUs, and a lot of our software capabilities around cloud GPU we started building around that time. All of those capabilities coalesced around our Tiers platform. Now, all of this software that we built is our practically own proprietary software, which wraps around a lot of curated open source software to deliver a complete platform experience. And we have also positioned this particular software as a sovereign cloud platform for running both CPU workloads, CPU compute workloads, as well as sovereign AI workloads. So we'll talk more about what's the sovereignty part in our software. Essentially, one is, of course, we continue to expand our public cloud software platform, where all of our data is hosted in India. We have a lot of our customers, they have the ability to build their org boundary on top of our public cloud platform, where they are assured of like security and that their data is not being used to train AI belonging to someone else in any way. So like that produces the effect of like having AI sovereignty over your infrastructure. So essentially, it should not be that usage of AI results in loss of competitiveness to the users of AI because they were running something that either could not make use of their own curated data sets, their own proprietary data sets because of concerns of sharing those data sets with someone else, or alternatively, it should not result in like you shared a data set and you got like a better result, but like that better result also propagated to other users of the same AI platform. So in our cloud GPU approach, basically like we are focusing on customers who want to run single tenanted AI solutions and achieve like complete sovereignty over their data and how their data is used. And we are also extending the same capabilities on-premise or using like customers' own equipment in the form of sovereign cloud platform. So this is something that like we have kind of like started doing like in the sense that like we have extended our cloud platform to kind of like usage by in any form factor. So the earlier form factors like we were looking at were like private cloud hosted with us, public cloud on any workload running on public cloud, any hybrid cloud workload. Now we are also extending those workloads to include like completely sovereign usage for on-premise customers or co-located customers who want to use our platform, where the platform can completely air gap the way the data gets transferred within their whole compute infrastructure. Now, kind of like we have been a major partner for NVIDIA in India. We have partnered with Intel and AMD, the other chip makers for a very, very long time for the CPU world. So like having our own software, which we have built like over last 10, 11 years, or 10 or 12 years, has enabled us to deliver like leading price performance ratio for our solutions. More recently, like our strategic partnership with Larsen Turbo gives us like access to the enterprise channel. So like these are some of the things that like are really setting us apart in terms of like our ability to kind of like help with the AI workload. So we kind of like started post like the major fundraise that we did in the last couple of quarters. Like we, as a company, we shifted our focus to make sure that we are servicing the needs of larger customers. Now, larger customers come with like their own requirements in terms of like typically we were working for a long time with customers who were using like maybe 16 GPUs, 8 GPUs, 64 GPUs. Larger customers typically tend to go between 64 GPUs to even 5 or 12 GPU clusters. So what we felt over the last couple of months was that like, yes, we are pursuing the larger customers, but we are not able to do enough trials for those large customers. And that is something that has resulted in us not being able to kind of like gain additional MRR. Like MRR has stayed, monthly recurring revenue has stayed constant from December to the March period. So major reason for that has been that like we have been running like a lot of trials with larger customers, larger startups, both directly as well as through our strategic partnerships. And like these are like long cycle sales, and we kind of like felt the need that like there is a lot more waiting for us in the pipeline based on like all the conversations our sales team has been having with like various parts of the AI ecosystem in India. And based on the ground level feedback, like we decided that like we need to really build up our capacity for pursuing like bigger goals. So we have built like additional capacity of 2048 GPUs, which is kind of like getting rolled out and getting integrated with our platform. And kind of like we have been a believer in AI ML infrastructure long before Gen AI was cool from 2020 onwards, being ahead of the curve. And our belief that like this is at least like multi-decade opportunity. AI is a multi-decade opportunity. Continues to remain very, very strong. And we continue to see ourselves as a supporter of AI, sovereign AI in India, supporting like AI startups in India, supporting enterprises, supporting like educational institutions. So we see some big opportunities. Like, so one opportunity that I described was a sovereign cloud platform. So where we are working in a market where it is dominated by two players today. Both of them, so one of them does like about $10 billion of revenue, and the license cost is almost like 4 to 5 times higher than what we are charging for our platform. And the other player does nearly like $2 billion of revenue. Again, the license cost is very, very similar on a per CPU core basis. So what we feel is that like a lot of our customers who were running like public cloud workloads with us, they also were running like a lot of workloads where they didn't want to put those workloads on a public platform where they did not control the entire network completely end to end. So sovereign cloud platform was our answer to having that sovereignty for their data, ability to keep it air gap, ability to work in any kind of regulated and compliant environment with complete vendor independence. So the second thing that like we are focusing on this year, your company got empaneled as one of the major cloud GPU providers in India AI mission. Now we feel that like next couple of weeks this is going to pick up like a lot of steam. Like one of the major demands that is coming into India AI mission, from what we have heard, is basically, again, like most of that is like public information on India AI mission's website, is that like they are inviting a lot of applications for people who want to build sovereign LLMs for India. And we have spoken to quite a few of those applicants. And typically we have seen that the requirements run into hundreds to thousands of GPUs for building sovereign LLMs. And we do hope to get a piece of this action. In India AI mission, like government has allocated a budget of like nearly 4,500 crores for cloud GPU, which is 40% subsidy over the overall, which means that India AI mission itself will drive additional demand of AI infrastructure of about 10,500 crores over the next 3 years. So essentially, you're looking at average new demand rated by India AI mission in AI in India to 2,500 crores. So essentially, that is also a big part of why we chose to do a rapid capacity expansion as opposed to controlled capacity expansion that like we were doing earlier. And with access to investment, like we felt that this is the right time to kind of like bet big on our capacity expansion. Now, India is home to largest number of engineers in the world, or the very largest number of engineers in the world. Like we are practically talking about 3 to 4 million engineers who are currently in engineering colleges or equivalent like MCA or BCA. Or so what we believe is that like AI being the future, a very large portion of these engineers would want directly or through their institutions to access like AI labs as a service, where they are able to kind of like learn and do demos on AI and kind of like build a career in AI. So that has also this is also something we have announced very recently. We have built a complete product for any student to be able to learn AI. And we believe that with a very large student base in the engineering side of like 30 to 40 lakh students, even if we are able to take like 10% of that overall market, like we are looking at like thousands of GPUs being consumed in either of these two things that you have mentioned, India AI Mission and AI Lab as a Service. We continue to work very strategically with startups that are working in the AI ecosystem, where we are identifying like good quality partners for building complete solutions, end-to-end solutions, where many of the partner startup solutions we will take to the market along with them with a joint go-to-market. And there we feel that there are large vertical industry segments, each of which could be worth couple of thousand GPUs or a couple of $100 million of revenue every year from a market size perspective. And we do intend to pursue a couple of these verticals and build our software into these verticals to expand into these markets which are developing very, very rapidly. We have recently strengthened our team in all its aspects to pursue more expansion from a sales point of view, where we are building partnerships very rapidly across the ecosystem, both towards the major hardware OEMs and the chip makers. And from a channel perspective, channel which reaches out into multiple sectors. So we have the team now to be able to start leveraging that. And we will continue to leverage our major strategic partnership from one of our major investors to reach out across the globe for selling our sovereign cloud platform. So we have couple of threads into multiple ways into the market, where each of the ways feels like it's at least even in the Indian market alone, we are talking about overall demand of tens of thousands of cloud GPUs. Now we have built a capacity where the capacity is enough to take us from monthly recurring revenue of 11 crores to maybe around 35 to 40 crores. Where we are targeting this number to be by end of say March 26 or maybe a quarter here or there. And we believe that so this is the MRR number which translates into ARR. And from a revenue perspective, we do expect to improve our showing next year from whatever current number we have to maybe about 1.5 to 1.7 times of that. Now, so these are aggressive goals. We are setting a very aggressive goal of 3 times monthly recurring revenue growth. And we have robust deal pipelines where we are doing fairly large size POCs, many of which are waiting for most of our new capacity to get tested and get deployed for these. And we continue to pursue more contracted business compared to on the hour or monthly business. So hopefully we feel that the time is right for our expansion in the next couple of years. And now I would like to hand over our call to our CFO Megha, who will briefly touch upon the financial highlights for the year and the quarter ended March 2025. Over to you, Megha.
Thank you, Tarun, and good evening, everyone. Let me first start by giving you some of the key financial highlights. First, I will summarize the performance for Q4FY25. For Q4FY25, the revenue from operations stood at 335 million, which witnessed a growth of 14% on year-on-year basis. EBITDA margin for the quarter is 40%, and PAT margin for the year is 41% for the current quarter as compared to 12% for Q4 24. The diluted EPS is 8 for the current current quarter as compared to Q4 24, which was 2.4. Coming to the financial year ending March 25, the total revenue stood at 1640 million, which witnessed a substantial growth of 74% on year-on-year basis. EBITDA for the year is 967 million, which further shows a growth of around 102% on year-on-year basis. EBITDA margin for financial year 25 is 59%, which demonstrate a growth of 820 basis points year-on-year basis. PAT is reported as 475 million, which showcase growth of 117% year-on-year basis. PAT margin for the year is 29% and diluted EPS is 27.2 for the year, which is around 85% increase Y-on-Y. That concludes the update for the quarter and FY25. And now we can open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir. Clarification from your opening comments. So you mentioned the lower utilization with respect to clients. So that was not clear. If you could tell the asset being put, but the utilization dropping is a function of?
Like basically I was talking about doing a lot of trials and POCs. So which means that paid revenue basis, like we did not pursue greatly because we were having very, very limited capacity. So our goal over last couple of months has been to focus on the customers who can grow very large for us. So in that sense, we prioritized future growth over today's revenue. And we have now done a lot of POCs. We have a lot of POCs waiting from larger customers for us. And we feel that so we have built the capacity to cater to those customers that we have trialed with and newer customers who want to trial with us. And we are seeing quite a robust pipeline of demand for cloud GPUs from us. I hope I am able to answer the question.
Yeah. So based on that, are you saying that your MRR will head 35 to 40 crores as an exit number for March 26?
Yeah, around that time, we are targeting that we should be able to hit that kind of MRR.
Okay. The other question is how much capex you will do in FY26, which is the year ongoing, and how much capex you will do in FY27 based on whatever visibility that you have as on date, business visibility that you have.
I think it would be a combination of number of factors. So infrastructure gets built in waves. So one is, of course, we have built a lot of Hopper infrastructure where there would be a lot of Hopper related demand. At some point of time, we'll continue to sell Hopper. We'll obviously look at a reasonable percentage of that Hopper platform being filled. And when we see that a reasonable percentage of Hopper is filled, then we will also look at adding a lot more Blackwell into the mix. So essentially, from the perspective of how much capacity to build, would be a combination of these two factors, where we start seeing the demand for the newer architecture. So we'll aggregate that demand and then make a conception and immediately invest into that. And also we want to have some reasonable amount of utilization on the Hopper before we start building out infrastructure on Blackwell. That is not to say that we will not build any infrastructure on Blackwell. We'll obviously like to build like initially a small portion of Blackwell infrastructure compared to the total we intend to build. And with every major generation that comes through, like we obviously would build additional infrastructure. I know that's a qualitative answer. From a quantitative perspective, like we are very positive that like the growth that we have started seeing in the Indian cloud GPU and AI, Gen AI market is sustainable and long term. So I believe that like we could potentially see like any large number, like in terms of like what's the number of GPUs you want to add, like potentially like every generation add at least like 2000 GPUs, and each generation is about 30 to 40% higher than the previous generation. So if we look at like say next 2-3 years, like we would be targeting like anywhere close to 10,000 GPUs plus overall on our platform. Today we are at like 3,700. So anywhere like next 2 years, like we should be able to add like anywhere between like 6,000 or so GPUs, maybe even more.
Okay. And my last question is, in your capital work in progress, what actually sits in the capital work
This is
in progress?
the 2048 GPUs being deployed. So that is the capital work in progress.
So this is 2000 GPUs. It is in tune with the meeting order?
No, so we have the delivery, it has already been delivered. Like currently, these GPUs are being tested on a cluster. The individual GPUs will always work, but the clusters, before you give them out in production or even for POC to any customers, need to be very well tested before you kind of like give them out to anyone. So currently, most of these GPUs are undergoing like very rigorous tests that are designed by our team, as well as like the tests which are kind of like recommended by the major hardware OEMs.
Okay. Thank you very much and all the best. Thank you.
Thank you. Thank you.
Thank you. Next question is from the line of Keshav from Niveshaay Investments. Please go ahead.
Yeah, thanks for the opportunity. As you mentioned, like in the previous quarter, we have given the GPUs for trial. So your expenses must have gone high, but in the financial statements, we are not able to see that. So could you please give some color on that?
So actually our EBITDA this quarter came down to 40% from 60%. Steady state is of course like we intend to get back to 60%. So more or less the expenses have remained the same. But obviously like the GPUs on POCs which are non-revenue or GPUs on trial which are non-revenue, the costs have remained like nearly constant over there.
Okay. And if you could highlight some like what kind of revenue we can expect from this sovereign cloud, like how much is the opportunity size that we are seeing?
The opportunity size for sovereign cloud is very, very large. Like the two major companies working on this one, like between the two of them, they do about $12 billion of revenue. One of them does $10 billion of revenue. The other one does about $2 billion of revenue. So from a sizing perspective, like sovereign cloud and sovereign AI, global market runs into tens of billions of dollars. Now, to pursue that, like obviously we have to kind of like do a lot of work in terms of popularizing, introducing, trialing, working with a lot of customers for that, working with a lot of partners for that. So this year we are not like making any prediction on like what would be the revenue for sovereign cloud platform. Primarily for revenue, we are projecting only the cloud revenue, cloud GPU revenue, based on the amount of capacity that we have built up. So we are making an estimate basis that, which is what we have projected. Sovereign cloud platform would be over and above that, whatever that number is. So like software sales, like initially, when you bring it out, where you say that, yes, we have a better tested software that we have operated for last 11 years, where we have solved hundreds of customer problems, where we have solved hundreds of security, performance, reliability problems. Like, so yes, we do have a better tested platform. But then, people who buy this kind of a software, they have their own set of tests they want to run. They may have additional feature requirements. So this will definitely take more time. So it's a long gestation period on this, but again, it's very, very rewarding.
Got it. And so those customers which were on trial last quarter, so what could be the timeline that you can expect, like the conversion timeline, if you could guide us on that?
So we are seeing increased conversion already. So now the quantum of conversions you cannot predict, but in a quarter. But what you can predict is what you feel would get done in next 4 quarters or quarters. That's easier to predict than saying what is going to happen next quarter.
No, the customer which were on trial last quarter. So what could be the timeline that we can expect, 3 months, 2 months, or 4 months? What is the trial period that they generally take? And
so I would once again repeat that these are long cycle sales where we are asking for a lot of money from the customers we are working with. So it's very, very hard to predict when you do the closure. You could be doing the closure at the beginning of the quarter, you could be doing the closure at the end of the quarter. A single customer with 128, 256 GPUs makes a massive difference over the MRR. So these things are hard to predict in the short term. So easier to say that, okay, over a long cycle with a larger number of trial customers on a larger base of GPUs, eventually it would become more and more predictable. So today, we are looking at very small base to begin with. We had very small capacity all through till the end of March. We have now built the capacity. We now have the sales talent and the other talent in the company at the back end to be able to do larger number of POCs and trials. We should expect currently the predictability is over a yearly time cycle. We should expect more predictability as we grow bigger.
Got it. And one last question. So is it Chennai data center live or is it working process?
Sorry, say that again. I didn't understand your question.
Is the Chennai data center live or is it in work in progress?
It's in almost live state. So we are still conducting a few more tests before we go live. To go live is still a couple of weeks away, but a lot of work has already been done.
Okay, got it. Thank you. Thank you so much for the opportunity.
Thank you. Next question is from the line of Kshitij Saraf from Tusk Investments. Please proceed.
Hi, Tarun. Good evening. Question on the CapEx deployment. So we understand that, okay, we are sitting on the cash and we are at the POC. So how would you time this CapEx in terms of the POCs you're running and in terms of the deals? So if you could just give a sense of what the average deal size would be, the kind of clients you're working with.
Definitely. So we have today built a capacity of nearly 3,700 GPUs, out of which about 2,300 or so of them are H200s. And this is based on our assessment of what sort of demand cycle we are seeing today. So based on that, basically the CapEx deployment plan is that in every GPU SKU family, the Hopper family, we will estimate the demand for that family. We'll invest into that. We'll go and invest into the Blackwells. Then we'll go and invest into the generation after the Blackwells. So every time we want to build a capacity of at least minimally at least 2,000 GPUs. And hopefully next year we might be talking about maybe do 4,000 GPUs in the next generation.
Okay, and could you share a flavor on the clientele, the size, what kind of workloads will run, what kind of enterprises are we talking about?
Today, it's very, very workload dependent. It's not from what industry where you're coming from. Typically, we are working with everyone. We are working with higher education and research. We are working with startups. We are working with media and entertainment. We are working with enterprises. So enterprises includes like all sorts of enterprises. So like we are practically working with everyone in our pursuit of like AI workloads.
Okay.
And of
Just
course, with
another
India
quick
AI mission, we will start working in a very big way with the government as well.
Okay. And just another quick one. Are you doing joint go-to-markets? You're just seeing some events wherein the L&T Cloudfinity team and you guys are liaising.
Obviously. L&T is our largest partner, so obviously we would be doing a lot of activities jointly with L&T. We also have a lot of other partners who we are already working with. So these partners include the AI community partners, so where we are kind of like working together with them, where we are doing events for startups, for students, for industry, for enterprises, for government and the higher education ecosystem. So we are present everywhere where cloud GPUs for AI are required.
Thank you so much. All the best.
Thank you, Chitich.
Thank you. Next question is from the line of Aditya Agarwal from Sagun Capital. Please go ahead.
Hi. Thank you.
Hi.
I just wanted to understand the economics of India AI mission, because it looks like we have offered the GPUs at the market at a discount of about 80% of the market rate. And even after the subsidy,
That is not true. That is not true. So that is not actually true. So the street price, the difference between street price and what we have offered to India AI mission, the difference is about like 20-25%. So like you can't like really compare the MRP of workloads which are very, very infrequent and compare them with like where the workloads coming in are in a much higher volume and almost assured workloads like long running workloads. So it's like two very different platforms. There is no customer acquisition cost. There is no sales and marketing cost. And of course, like when you go through one single generation of a GPU, like the beginning of the generation, if the GPU is most expensive, by the end of the generation, the GPU becomes cheaper. And the same thing also happens when you are selling the cloud GPU. In the first year, you make more money. Then second year to fifth year, the money stabilizes. Sixth year, again, it becomes like kind of like slightly lower utilization. But all in all, like you're looking at like 5 good years in a GPU. Now, India AI mission is a outlier in terms of like the demand that India AI mission can do. We are talking about like 3,500 crores of new demand every year. And this is a demand which kind of like does not require you to go out, sell to one customer at a time. This is a demand where you don't need to do trials. So your customer acquisition cost is very, very low. So to reflect all of those savings and maybe some bit more discount with a view to kind of like win the bid. Like typically that's how the pricing is done. So it's not like crazy pricing that we have offered. Like that's not the case. It's like reasonable, commercially viable pricing that we have offered.
Okay. Thanks for explaining that. And when do you expect this mission to take off, and can we start some good amount of revenue coming in from this?
It's already taking off. Like I think like hopefully in next couple of weeks we'll start seeing the workloads and all of this coming through India AI mission.
Okay. And you have any expectations about like what type of numbers will that be?
See, like we are talking about like some 3,500 crores of revenue every year. Now we would obviously go and target like minimally about like say 10% of this revenue, and hopefully like we could even like top that 10% to maybe even do like maybe potentially like 20%. So let's see how it goes.
Thank you.
Thanks.
Next question is from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is regarding the peak revenue that you can generate from the existing set of GPUs. Assuming that you don't add any other GPUs, what sort of revenue can you generate total?
That would be close to 40 crores. So that's why like the number of like 35 with the view that like there would be some percentage which remains like unutilized for POCs, etc., or for hourly users to be able to use at any given point of time. So peak should be like all the way up to 40, and reasonable utilization rate of like somewhere between 85 to 90 should result in about 35 or so.
Okay. And sir, for the incremental capex of 6,000 GPUs, basically we are at 3,700 GPUs, and you mentioned about a target of 10,000 GPUs. For additional 6,300 GPUs, even if you assume a 45 lakh per GPU cost, that comes to closer to 2,500 to 3,000 crores of incremental capex. So how do we intend to fund this?
So, like obviously, like once you start generating cash flows, it opens up the possibilities of like using a lot of debt. So we have used debt in the past, like we have done very well with that, and like we'll continue to be very, very aggressive in terms of like being able to arrange whatever capital is required for our expansion, either as debt or yeah.
Okay. And with respect to AI and sovereign cloud, overall, if you were to calculate or separate these businesses, what would be the rough EBITDA margin? I understand there will be some cost savings, but if you were to just separate the entire two verticals, AI mission and sovereign cloud, what would be the margin range?
It would not be very, very far. Like I think like the difference would not be very high.
Okay. So with AI mission and sovereign cloud also will be able to maintain the 60% sort of EBITDA margins?
Yes.
Okay. And sir, is there any seasonality in Q4? Because I see other expenses even last year were high in Q4.
No, so I tried to explain that. Like, look, we had very, very small amount of capacity all through like last couple of months. So yes, that some of that capacity actually went idle, which is what we were able to utilize for doing trials with our larger customers. And the thought process was that like immediate revenue is not that super important. What is more important is to build for the future. So based on like all the conversations and all the trials and the engagements that we have had with a lot of customers, we decided to build the capacity of like overall like additional 2048 GPUs, and that is definitely the goal. Now, obviously, the costs do not come down because like you were at that cost structure, but the revenue was not there to kind of like yeah. So revenue was not there to kind of like. Sure.
Yeah. Let me just rephrase this, sir. So in Q1, Q2, Q3, there was an other expense of closer to 2.3 to 2.9 crores. And in the fourth quarter, it has directly jumped to 5 crores. And the same period last year, it was 4 crores. So just trying to understand what is this variability or volatility in other expenses.
Okay. So see, we had a very, very small company, and a very consistent feedback we got when we met people that, oh, you guys are doing great. Like you guys have great technology. You are able to deliver great services. But how come we never heard about you? So basically, we had to up our game on the marketing to kind of like obviously correct this. So which is what is showing up in terms of like higher spend on the marketing, event marketing and marketing efforts from our side.
Okay. And just last thing on the long cycle customers, what would be the cycle range? Is it like a 2-year, 3-year commitment? And what sort of margins? Is it going to be lesser than the historical margins, or how are we going to sign this up?
No, I think the price and margins would be very, very similar to what we have been doing historically. And like typically, like we look for yearly renewable contracts, 6 months to 1 year renewable contracts. And mostly, like, depending on the customer, typically, like, the 6 month or 1 year contracts do get renewed for the same period again. And we hope for a reasonable lifetime value of like 2 to 3 years with more stable and larger customers.
Okay. And sir, on the overall demand environment, are we seeing reduced infra spending across India or globe, or what is the environment out there?
No. Infra spend keeps on increasing. Like, so we have seen that in the cloud in last 20 years. The like amount of compute you can buy with the money, like that can increase, especially with newer software and newer SKUs. But the demand continues to remain for everything that has gotten built into the cloud, like on a continuous basis. So, like the cloud always gets utilized. So, like that demand is never economic on the cloud.
Fair enough, sir. All the best, sir. All the best to you and the team. Yeah, thank you.
Thank you.
Thank you. Next question is from the line of Harshi Shah from Bees Capital. Please go ahead.
Hi, Tarun. Just wanted your broad view on how the update on this L&T partnership is going, the impact of, gaining enterprise clients, and you mentioned marketing. So, all along those lines, how are we placed to get more of enterprise client, and maybe the next 1-2 years, how do you see the mix changing toward these bigger clients?
See, obviously the L&T partnership is very, very strategic to us. So, like, I think like L&T brings like a lot of capabilities to us, like, so which we have not yet fully started leveraging, which we intend to change over like next couple of months and couple of quarters. Now, it's a very large ecosystem, extends across the globe. We have been limited to India. Like, so I think one of the major changes with L&T is automatically being able to kind of like pursue more international business, especially for our sovereign cloud platform. Dream big and think big. So think bigger deals, bigger customers, be able to put more towards customer acquisition costs by having a well-qualified sales and pre-sales team, and strengthening of the overall thought process towards longer and bigger vision. So I think like that's all kind of like some of the things that have changed for us in terms of having partnered with someone as capable as L&T.
Understand. And how's the progress on the Chennai data center?
Yes, it's almost ready. So we should kind of like go into production mode very, very soon. So it's like up and running already. But like we have to kind of like flip the switch and say now we can accept like production customers. So that hasn't yet happened, but like that will happen very, very soon.
Okay, great. Thanks a lot.
Yeah, thank you.
Thank you. Next question is from the line of Amar Maurya from Lucky Investments. Please proceed.
Yeah, hi, sir. Am I audible?
Yeah, hi. Yes, we can hear you.
Yeah, I just wanted to understand. Now, you said you have how many H200, how many H100, how many L5s and V5s now in the
They are all mentioned in the presentation. Approximately, we have 700 H100 and nearly 2300 H200. So practically the near latest generation, like we have nearly like 3000 or so GPUs today in the Hopper generation.
And secondly, this 626 crores of capital work in progress, how it will...
That is majorly the 2048 H200s that we procured around end of March, and which are going live into production very, very soon. So they are already up and running in Delhi NCR, and they would be kind of like flipped over to production soon in the Chennai data center as well.
Okay. So basically in 3-4 months, in Q1, everything will be capitalized, right?
Yes, in Q1, like everything will go live.
Got it. And secondly, sir, this India AI mission, right? We aspire to, what you're saying is targeting a 20% market share.
Yes, absolutely. So over the long term, over a 3-year period, we are obviously trying to be a major player in the India AI mission. So we would definitely try and target somewhere between 20-25% of the market share within India AI mission.
So then you're saying, sir, 4,500 crore is the spend of the government, and you're saying that.
So that is 40% subsidy. So overall spend over a 3-year period would be 10,500 crores.
Yeah. So, but then, sir, ultimately subsidies, whatever, customer is going to pay that, right? So for you, so it is a revenue.
Yes. For us, the whole thing is revenue. Absolutely.
So practically, you are talking about a 900 crore kind of a revenue just from India AI mission at the peak.
It could be possible, yes.
Okay. And you mentioned that sovereign cloud will also have a similar kind of margin profile, what your GPUs have?
So sovereign cloud is practically which is air gap cloud for customers who are running it typically on-premise or on their own controlled co-location environment. So you are practically looking at apart from support, sales, marketing costs. So essentially you're looking at a 80 to 75% kind of a gross margin profile on sovereign cloud platform.
Okay. So basically you are saying majority of that is going to flow to EBITDA. That is what is your understanding here.
Yes, absolutely.
And what, according to you, how much scale up, let's say in a 3-year period, of sovereign cloud business can happen to you? Because I believe you are targeting here the government business as well as the global business with the L&T partnership. So if you can give us a near term as well as a long term vision about this particular business.
See, long term, of course, we are this is a very, very large market. So even as a small player in a very large market, we should be, we are practically looking at even if we capture couple of percentage points of that market, that could be worth hundreds of millions of dollars. But practically, we can't really start predicting it today. So we would like to give it some time before we kind of make some sort of projections around how big it can be.
Okay. But early indications, what are the kind of RFPs, what is the range of RFPs you are bidding with L&T in government business?
So they are all sorts of ranges. Typically, of course, any requirements are multi-year requirements. So essentially they could range from very small numbers, sub 100 crores to 2,000 crores. That's the intent, that where our software should go along with our partners in larger RFPs. That's the goal that we have for us. We'll not talk about what we are doing currently over there.
Got it, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the question queue, please restrict your questions to one per participant. If you have any follow-up questions, please rejoin the queue. Next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity. And just wanted to check what was the revenue in March 25 with MRR?
That is mentioned in the presentation. It's nearly about 11 crores or so.
And did I hear it right that from 11 crore it will go to 40 crores in the next March 26?
That's the goal.
Got it. Okay. Thank you. I just wanted to clarify that. Appreciate it.
Sure.
All the best.
Sure.
Thank you. Next question is from the line of Prathamesh Diwar from Tiger Asset. Please proceed.
Yes, am I audible?
Yes, please.
Go ahead.
Yeah. Hello. Am I audible, sir?
Yes. Please
you're
proceed.
audible.
Yeah.
Please proceed.
Yeah. So just if I missed it earlier, so just wanted to know about our TIR platform more. So as it uptakes, what sort of incremental MRR it can generate for us?
So Tier is a integrated part of our cloud platform itself. So it's like in a way like bundled along with when someone is using like any kind of cloud SKU, they have the ability to use Tier platform with that. So it does not like represent additional revenue on the public cloud platform, but it increases the stickiness of the public cloud platform. It increases the value being produced for a customer on the public cloud platform, and it allows the customer on a public cloud platform to kind of like do more with less amount of time spent and less amount of effort spent.
Okay, got it. So it will kind of increase our contract timeline with the
So
customer.
it increases the stickiness for the customer. So once they are used to a particular platform, so it's like any major software, like when you get used to a particular software, you want to continue using that software rather than learning something new. And you build your workflows, like the software becomes a part of your workflows. So to making your life easy. So broadly, that's the value prop for like any software features that we build on our cloud platform.
Got it. Got it. And so the 900 crores revenue we are expecting from AI mission, from when are we looking at to
So that's
start
like
this
over next 3 years, like what's the distribution in year 1, year 2, year 3? We don't know that yet today.
Okay. Got it, sir. Thank you so much, sir, and all the best.
Thank you. Next question is from the line of Neil Munot from Pico Capital. Please proceed.
Hi, sir. Good evening. Hello.
Hi. Yes, please go ahead.
Sir, am I audible?
Yes, please.
Yeah. Hi, sir. My first question is with respect to what is our current capacity utilization on the existing GPUs, excluding the 2048 H200?
Yes, so it's total 3700 GPUs. So 3700 minus 2048 is the current capacity on GPUs. That includes multiple generations and multiple queues on the GPUs, starting right from V100, C4, A140GB, A180GB, then L40, L4, L40S, A40, and so on. And A30s, a lot of A30s as well.
Yeah. So what's the capacity utilization there?
Capacity utilization, like typically, like we track like not on a per GPU or number of GPU basis. So we track the capacity utilization overall from a perspective of like what it can generate. Like so, if you subtract the 2048 GPUs, then you're looking at like maybe sort of like MRR capacity of around say somewhere close to 16 to 18 crores per month overall, including all the existing CPU storage and GPU capacity. And including this one, the overall MRR capacity comes close to around 40 crores. Obviously subject to variations in terms of what SKUs get used by the customers, whether these are hourly, whether these are yearly, whether these are monthly, and so on.
Understood, sir. This was helpful. Also, sir, if
Sorry,
my interpreting
Mr. Munot,
correctly.
may we please request you to rejoin?
No, it's just a follow-up.
Complete the question, please. Yeah. Please, sir, go ahead.
Just to interpret this correctly, so the remaining 2048 GPUs would get us an MRR of 22 odd crores. Is that correct?
Yeah, roughly. Yes, that would be correct.
Yeah. And one last question. With respect to the hourly pricing on the AI mission, if you could put some color on it.
Yeah, so like I said, that like this is reasonably close to the street price. It's not way off. And hourly is a representation of like monthly and 6 monthly and yearly pricing. So most customers, they don't tend to use hourly pricing at all. Most customers are on monthly or 6 monthly or 1 yearly pricing. So like, basically like this is by and large very similar to the street pricing. It's not very far off.
So, isn't the current revenue dip in the last 2 quarters with respect to pricing or the mix seems to be a pricing issue rather than a utilization issue?
See, we focused all of our inventory to the future, where we focused not on converting that inventory to immediate revenue with smaller customers. We prioritized doing trials and display our capabilities to the customers who could grow potentially very large. And that is where like we spent a lot of our capacity, and so that decreased the paid revenue basis utilization on our inventory. So that is the cause of the dip. Like practically from a price point perspective, I don't see a major challenge over there.
Okay, sir. Thank you for taking my questions.
Okay.
Thank you. Next question is from the line of Gunjan Kabra from Nivesha Investments. Please proceed.
Hi, Tarun. Thank you so much for the opportunity.
Yeah.
So from the industry dynamics and adoption, I wanted to understand that, the longer term trend of adoption looked pretty interesting and intact that way. But the last quarter there were trials, and this quarter also we witnessed a lot of trials that way. So where we wanted to convert the customers in a big way, right? You mentioned. So just wanted to understand from this first question is, what is the percentage growth in terms of new inquiries and trials that you saw basically quarter on quarter? And the secondly, from E2E perspective and from the industry perspective in India also, approximately considering the customer base also that we have right now in terms of trials that we are witnessing, where do you think this learning curve will translate from our customer base also, and from the industry perspective also, will translate into an exponential growth kind of a scenario from overall E2E perspective?
Sorry, it's a multi-part question. I don't kind of understand it fully, but I'll try to answer it as best as I can. So I think broadly you're asking whether there is demand for GPUs. Has the demand grown or has the demand come down?
From
I think
from
the demand.
E2E perspective, I wanted to understand what the number of trials
I am talking from a E2E perspective. So I'm not talking from an overall industry perspective over here. I think we've seen increased demand in terms of number of inquiries and number of conversations that we have been having. The pipeline has been very, very robust. And that is the main reason why we decided to build capacity very, very rapidly. If you remember, we have been talking about why don't we build maybe 256 or 512 GPU clusters every quarter. And then we changed our strategy and said that look, there is enough demand. We don't need to wait that long. We can go ahead and build 2048 GPU cluster right away. So that is our view, that the demand is quite robust. And the long sales cycles, the conversions, you cannot time them. So there are certain objectives of every trial that you need to meet. And then customers, of course, larger customers have their own processes. They have multiple stakeholders. So these conversations, these conversions in the enterprise side, larger customer side, they obviously take time. So you cannot predict okay, what's the sales cycle. So this is practically we've started working with customers much larger than us, or customers who have much larger scale than we have seen in the past, over last 2 quarters only. So we are also gaining a lot of experience over there. So I said that we do not have immediate predictability, but we are very, very confident that over a yearly cycle or maybe 4 or 5 quarter cycle, we are targeting that overall 35 crore to 40 crore kind of MRR. So that's what we are more confident about, to be able to say that, okay, do we know what is the measurement of the sales cycle today? The answer is no. Do we know that when a particular customer will grow from say 8 GPUs to 1000 GPUs? We don't know the answer to that. So many of the customers are also growing very fast in terms of their utilization of cloud GPUs. And sometimes we ourselves are surprised that, okay, this customer was doing a couple of lakhs of MRR, and now that is already doing say 5 times of that or 10 times of that. So these are not super predictable items, but over a longer term on a larger customer base for the capacity that we have built, we are confident that like we'll kind of like get on with our journey to where we intend to reach.
Okay. I understood it. Okay. Yeah. Thank you so much.
All right. Thanks, Gunjan. Yeah.
Thanks.
Thank you. Next question is from the line of Sampath Nayak from ZTO Capital. Please go ahead.
Hi, Tarun. How are you doing?
Hi, Sampath. Yeah, please go ahead.
So, Tarun, two questions. So, you said MRR of 35 to 40 CR. So, it's exclusive of India AI mission, right?
No, all inclusive.
Or okay. And second question, on sovereign cloud platform. So, in the agreement with the L&T, you had mentioned number of 30 crore per year. You'll be licensing it for 30 crore, and the reseller agreement is for 35 crore. Can you tell me more about it?
So these are the limits. These are the limits for which we have taken the shareholder approval for related party transactions. Now, this is the maximum number for which we have taken the approval. Of course, if we exceed those numbers, we'll obviously go and take larger limit approval from the shareholders. But these are not the numbers which represent revenue today.
Right. So, I mean, are these numbers per megawatt? I mean, like 30 crore licensing revenue.
So you can represent. No. So like the licensing metrics kind of like are dependent on the amount of compute capacity. So power is one measure of those. There are other measures also. So like the measure that we have with L&T could be different from what we have with other customers.
Right. So also, Tarun, this SAP platform. So this we launched because are we seeing increased trend of repatriation? I mean, the companies are preparing.
Absolutely. So there is a very broad and increasing trend of cloud repatriation that we are seeing, and we are seeing like a lot of conversations around our sovereign cloud platform.
Okay. So say, I mean, India comes up with 4 gigawatt of capacity in next 2-3 years, right? So are we in a position?
See, every megawatt of compute from a software licensing perspective, although the license terms would not be in terms of power. So every megawatt of like compute capacity that gets built on the private cloud or sovereign cloud side, that represents about like say anywhere close to $2 to $3 million of revenue on the software side.
Right. So coming to that, so if India comes up with say 4 gigawatt of data center capacity,
so let's say 2 gigawatts of that is not amongst the public clouds. 2 gigawatt is being used by say private cloud. Then that represents about like $5 billion of software market for infrastructure software.
Right. So are we in a position to capture at least 10% of the market?
Like we have already said that like this is like early days for sovereign cloud platform. So like let us wait for a couple of quarters before we are able to kind of like have predictability around the sovereign cloud platform.
All right. So okay, sir. Thank you so much and all the best.
Yeah, thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as a last question for the day. I would now like to hand the conference over to the management for the closing comments.
Yeah. So thank you everyone for attending our conference call. Like we hope we have answered all your questions. In case like you have additional questions, please do reach out to us on email ID investors@e2enetworks.com, and we will try our best to answer the questions. And thank you everyone once again, and have a good day.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.